Coming up on the SBS on the Money podcast, the Australian share market hits a record high ahead of the RBA interest rate decision tomorrow. Lithium miners rocket, and we take a closer look at profit results from JB Hi-Fi and Car Group. All of that and more next. Hi everyone, it is Monday, the 11th of August, 2025. Welcome to the SBS on the Money podcast. It's a day where the Australian share market hit a record high. The S&P ASX 200 up 0.4% to 8,844 points. Today, 8 of 11 sectors ended higher. Consumer discretionary the worst though, followed by information technology, but the best performing sectors included materials up 1.56% and consumer staples. For more on the day's market action, ahead of the RBA decision on interest rates, I spoke with Elio D'Amato, founder of Enviroinvest. Elio, the ASX a little higher today. Why and what's driving it?
Well, we're seeing a continued sector rotation, as it were, in regards to getting out of financials and getting into materials. And we've seen that for the last month and a little bit of that today. That was turbocharged somewhat, of course, by the big announcement in regards to the lithium market, whereby Cattle decided to, unfortunately was forced to close down one of its mines for what reports say is about 3 months, which acted as a bit of a firecracker to the lithium price. Of course, spodumene here in Australia rose by more, and hence why Australian lithium miners have had a good day today. So that, coupled with the fact that we've now crossed above that one magic US $100 a tonne mark for iron ore, means that there's been continued strength in that space.
RBA decision tomorrow. What's the market expecting? Why? And what are the implications for investors? Because the last time expectations were for a cut, we didn't get it though.
And very true. So there is an element of trepidation, notwithstanding the fact that every economist expects at least a 25 basis point cut to be announced. There are some brave souls accounting for a 50 point basis cut. But I think in general, though, the market expects a bit of debate to occur at board level, but ultimately for a rate cut to occur. That has been driven by some inflation numbers, which sit within the RBA's range, plus some unemployment numbers, which came as a little bit of a surprise, as it were, to many keen watchers. And therefore, we feel that there will be capacity in the economy to absorb a rate cut, notwithstanding the inflation concerns, which perhaps were somewhat overstated in regards to its last rate decision. I think this time around we will likely see a bit of a rate cut to occur there. And that obviously flows through to all the stocks at the moment, particularly in financials, whereby there are some question marks around margins, because obviously everyone will be watching that following this latest rate cut should occur tomorrow, and what that potentially means for their portfolio and the broader market as a whole.
Reporting season rolls on. One of the big ones today, JB Hi-Fi, a shareholder bonus in terms of a special dividend, a higher future payout ratio for shareholders. It's in a rise in net profit of about 5.4%, but also the resignation of its CEO. I think shares have been all over the place today. Initially a good reaction, then it's down. What do you make of the news and of the way the company's trading?
I think you've hit the nail on the head in regards to Terry Smart's departure. I mean, make no bones about it, JB Hi-Fi is a premier consumer discretionary stock. And to be quite frank and honest, if you're going to invest in the space, then you've got to look there if, nowhere else. And I think Mr. Smart's been associated with the business for quite some time, in particular the turnaround of the Good Guys, their ability to continue to grow, notwithstanding the broader sector uncertainty that has occurred, very disciplined cost management, and that's flowed through to margins and the like, has meant that this has been somewhat a darling of many analysts for quite some time. Notwithstanding that we're trading, or that the stock was trading at nosebleed levels, I think it's fair to suggest that, Mr. Terry disappearing, as it were, is, going to cause a little bit of worry. So this is a case of the good news, bad news scenario, where I think that, the company's had such good news in the recent past that, unfortunately it's bad today because, I read somewhere that it was possibly a little earlier than what was expected, but at the end of the day, unless you live forever, which I'm yet to encounter anyone that does, this was going to occur in time. So just a bit of disappointment in regards to the head of the business departing. But, Nick Wells is going to take over. He's been CEO of the firm for quite some time. So if you've invested in JB Hi-Fi in order for its steady earnings growth and its strong trajectory in terms of its share price, then I think we're going to see much of the same going forward, which is somewhat pleasing, I think, for long-term holders, but I can understand why short-term holders are a little bit nervous.
Yeah, and it was also interesting to hear him say that the last quarter in terms of sales was really driven by certain product categories, and they mentioned the Nintendo Switch too, which has also been mentioned by other retailers recently too. So that's quite interesting to see, is that certain products attract that consumer, even though there are these cost pressures for many others out there. Any other profit numbers that you're looking for?
Oh, look, to keep to the same sort of theme in regards to Car Group, I mean, they came out with a pretty strong result in terms of our view. I mean, double-digit net profit growth. I mean, the majority of their earnings now come from overseas rather than their traditional car sale business here in Australia. Notwithstanding that, classifies as a bit of a dirty word to some, it is true that they've built a very strong network effect. And because of that, they've yielded some very strong returns in regards to their bottom line and the like. So, notwithstanding the, I think the dividend only increased by around 8% which in some minds might be a little bit, lower than what was thought of. This was a stellar group, and Car Group continues to be a mainstay in many long-term holders' portfolios. Another stock today is Iris. And they came under, scrutiny in regards to a possible private equity buyout of the business, which saw its share price spike on the day. It then came out with its half-year result just recently, and the share price has come all the way back down. Obviously, citing in regards to things like, profit was flat. Notwithstanding also they maintained their guidance. It was a little bit disappointing in regards to its business, particularly that anything, they threw out the word AI quite a bit. And no doubt there was, and there'll be more in the various analyst presentations to occur. But as far as we're concerned, this was a little bit disappointing. And anyone running the rule over an Iris will probably take into account its latest profit update, which was, as I said, a little bit flat, and therefore does it justify the premium, especially now that it is, again, trading at high levels.
And finally, what are you telling your clients right now, and where do you see the opportunities for investors?
Yeah, well, bull markets are great opportunities to be able to rebalance one's portfolio. So I know it's hard because, of course, in the broader market, we're all making money irrespective of where we're in at the moment. And, it becomes very hard to actually sell a stock. But now this is the difference in regards to money managers and stock pickers, as it were. When it comes to managing money, then obviously taking profits off the table is a pretty smart strategy. And if you look at the landscape at the moment, any stock which is perennially disappointed, i.e., all boats don't float, as it were, in regards to a market rise, then they need to be scrutinized quite carefully, because ultimately there might actually be the need to sell those stocks off and go look elsewhere for opportunities. So, but that's obviously where the attention's going to lie, because you know what, if they're still great businesses and they're still doing all the right things, then now's a great time to possibly top up in those stocks and using some of the profits that you've made elsewhere. Very hard to do, but an important distinction. I think now that the market's trading at all-time high levels, it's a great opportune moment for DIY investors to do that.
It's Elio D'Amato there from Enviroinvest. That wraps up the podcast for this Monday. The big one tomorrow, profit reporting obviously rolling on, but it's the RBA interest rate decision. As Elio mentioned, the market is expecting a 25 basis point cut. We'll find out tomorrow afternoon, and we'll have the details in the podcast then. Bye. This SBS on the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.